Fun Max. Thank you all for coming on. This is my very first Facebook Live video. I've probably watched less than 10 videos on Facebook Live in my whole life, but this is a way, I'm told, to be able to communicate to the masses, to be able to give things to the masses. Years ago, being in the financial services industry, I would hold seminars where people physically had to be able to come to get information, to be able to ask questions. And now, through this type of media, you're able to ask questions immediately and be able to get answers immediately, or I'm able to direct you to a place where you're able to benefit. And we do this as a service that we've done for others. We believe in giving. Our number one key is for you to improve your retirement experience, for you to have a better experience in your own retirement through your finances, through your income taxes. Today, we're going to talk about one of the little known biggest keys to income tax savings. So many people talk to me about taxes. Oh my gosh, it's so complex. There's so much to it. They say all these different CPAs, if they look at the same income taxes, they're going to give you a completely different answer. Today, we're going to talk about something that when you know this, it's going to be the key to you managing your tax costs. You know, in the upper right-hand corner, there's 3 little dots that you can click on and you can share this link with others. We believe in sharing. We hear so much in the media today that's divisive, that's against and against. I believe and I see through America that we are some of the most giving people in the world. We like to share and we like to give, and that's exactly what we're doing with what the program that we're doing here through fundmax.net is sharing that information, sharing those things with others. You're able to ask questions, you're able to share it with others, you're able to allow them to ask questions. Everything is working good. Income taxes can seem daunting. Line 43 is what we're talking about. What's your 43? And I'm going to repeat it a few times. So if you're coming in late, I'm going to rehash a few things. Line 43 is not what you made in income. It's not what you made in dividends. It's not what you made in Social Security. It's not your tax deductions. Line 43 is your taxable income. It's the number that counts on your income taxes. Now I have to tell you, I'm giving you tax tips or maybe tax questions, ideas of things that you should be asking when filing your income taxes. I'm not a CPA. I don't play one on TV or on Facebook Live. These are things that you should be asking your financial tax professional, your CPA, or your accountant, or the person that does your income taxes for clarity in your own particular case. Let the experts do what the experts do. Line 43 is on the second page of your income taxes. It's at near the top of the right-hand corner. You'll see it there. Line 43 is your taxable income. And the reason this is important is because it determines what you ultimately pay in your income taxes. Why this is so critical is because of marginal tax rates. What marginal tax rates means is that when you go beyond another threshold of income and on to another threshold of income, you're going to be paying sometimes at a significantly higher tax rate. As an example, if you have, and I wrote down some numbers, if last year you had an income of around, let's say $103,000, and after all of your deductions, your taxable income, your line 43, what's your 43? Your 43 is $75,000. That tax cost on the $103,000 that you earned for your federal income taxes would be around $10,000. And if in the year previous you earned $143,000, only $40,000 more, that marginal income tax cost difference would be an additional $20,000 or $10,000, a total of $20,000. I'm going to go through this. I'm going through a little bit quickly. I'm going to kind of slow it down a little bit. But suffice it to say, if you make 40% more income, you could be paying double the income tax cost because of marginal tax rates. In 2017, the marginal tax rate change was at around $75,000. So anything less than $75,000 was taxed at 15%. Anything greater than $75,000 now gets into that marginal tax bracket of 25%. So each additional dollar, rather than costing 15 cents to be able to use, it costs 25 cents to be able to use. I'm going to look at the comments real quick and see what we have coming in. Oh, where can I find out more? Finding out more about the 43, it is the second page of your income tax cost, second page of your 1040 form on your income tax. If it's a simple form that you're filing, you're not going to have 1040. You're not going to have line 43. It's on the second page, line 43 of your income tax cost. Another reason this is important is when you're thinking about doing a Roth conversion. When you do a Roth conversion, you're paying income taxes on your IRA today. Oh, here we go. We got a call coming in. You're paying income taxes on your on your IRA today, so that in the future you can get that money tax-free forever. But the key difference, though, is if that's pushing you into a higher income tax bracket, that for you may be artificially pushing you into a higher tax bracket that you're not going to be in the future. So this is what you can do. In addition to knowing your 43 for this year, you want to know what your 43 was for last year and for the year before that, so that you can try to have a level of consistency in your income tax costs. So going to the example, if my taxable income, not my gross income, not my Social Security, not my dividends, not all those things, if my taxable income is around $75,000 this year, and last year it was $115,000, I paid twice as much in income tax last year as what I'm paying this year. And what would even be worse is if the year before that it was back at that $75,000, I probably could have spread that income around just a little bit so that I could have significantly lowered that average tax cost. When doing a Roth conversion, because every dollar that you convert goes on to the top of the dollars that you've been paying taxes on before, it's the marginal income tax. That's the actual cost of the Roth conversion. Oftentimes I will have people that are referred to me that say, my person told me that at my age, I'm 55 years old, I need to start buying life insurance so that I can divest some of this tax cost that I'm going to have from my IRAs and my 401ks that I'm forced to take out when I'm 70 and a half. I had just had a case where a gal was making $110,000 currently, and in retirement she expected to earn about $75,000. And the advice that she was given is to do a Roth conversion. The advice that she was given was to take money out of her 401k and start buying life insurance with it, so she would not have to do the required minimum distribution when she turned 70 and a half. They went through a bunch of charts, and it kind of, you could see kind of how it made sense, but what didn't make sense was her average tax cost that she was going to have if she followed that plan. And what's even worse is the financial professional that was serving her was well-intended. They were trying to do the right thing. They were trained about a life insurance program that was a beneficial program. They were trained how to present it. They were trained how to show the illustration. But what they weren't trained to do was to ask how it would affect her income taxes doing it the way she was planning on doing it, or doing it with the life insurance. She didn't know to ask it. They didn't know to ask it. When we had a CPA look at it, it was obvious that it would be much better for her to continue saving money into her 401k and then start taking distributions when she retired in her mid-60s as she was planning on doing. I'm kind of getting a little bit off the line 43, but I want to talk to you about some of the things that affect your income taxes. I see we just had a CPA join. As always, make sure that you are talking to a tax professional before you do anything. Don't look at this as tax advice. Look at this as questions that you should be asking your tax professional. What's my 43? How does this affect my income taxes? How does it stabilize my income tax cost over the last couple of years, and also position it that over the next few years, it's going to be consistent as well? That's the biggest opportunity. We talk about some of the tax reductions that we've had over this last year. Knowing what your 43 is going to be the biggest benefit you're ever going to receive from a tax cost management standpoint. Should I work with a professional 43? Okay. Joe asked, should I work with a professional on my 43, or is this something I can manage on my own? You know, I forget to tell you this. On the top, there's 3 little dots. You can click on that to share that with others. The only way people find out about this site, we've decided to grow this organically. The only way people find out about this is if you share it with others. I'm interested in comments, in criticisms, anything that we can do to better serve the community, to better educate the community. We want retirees to have a better retirement experience financially. There's so many things that happen that are against them. There's so many challenges that they have to deal with, and a lot of it is only because of misinformation. We're able to provide that information in a way that they're able to learn from it, they're able to benefit from it. Okay, should I work with a professional on my 43, or is this something I can manage on my own? Looking at line 43 is something that you can do on your own, but asking your tax professional, what has my taxable income been for the last 3 years, is going to be a great question. It's going to show them that you're sharp. It's going to show them that you're paying attention to the right things that need to be paid attention to, and they're probably going to tend to you better than what they would the average person that they probably tend to quite well already, because you're asking very technical, very specific questions. Nevertheless, you can look at it yourself. It's on the second page near the top on the right-hand side, line 43 of your income taxes. That will tell you. And the key is looking back over 2016 and 2015, and now what it is in 2017, and be thinking through the course of the year how you're going to leave yourself at the end of this year and what your tax costs are going to be. Oh, thanks, Joe. Another question. Does this apply to everyone? It does. This is one tax thing that no matter how much you earn, no matter your situation, it applies to everyone. And it particularly applies to those that are business owners, those that are higher income, those that have fluctuating income year over year, those that receive bonuses, those that are able to kind of manage some of the income that they have. They're going to have fluctuating income, and their tax expense is going to be sensitive to that fluctuating income. Okay. Let's see if I missed anything. This is good. As I mentioned, our goal is to impact the retiree, the retirement experience for those that are retired, to be able to, through information, by eliminating misconceptions, by answering questions that you have, and also questions that you wouldn't even know to ask, be able to answer those questions so that you are able to benefit, you're able to feel, in fact, all set, to be able to feel like you're very well tended to. And there's so many things that we're able to offer today on the internet that we're able to give and that we're able to provide, and that we're able to just kind of direct you in a way that's able to benefit you. So if you would please Oh, nice video. How often do you do this? We're going to start doing it once a week or twice a week. I want to try to do it. Now, this is my very first one, so we're going to see how how it goes. But I want to do it every Tuesday and Thursday at 1 p.m. I want to be able to hold this as a forum where people are able to ask questions. So if you do have questions, you can send them directly to me, direct on my Facebook, and we will accumulate those questions. We will try to answer every single question. If we get a lot of them, we might kind of summarize them, but we'll try to answer every question for you and make ourselves available to you. If you would, please, I would appreciate very much if you'd click on the 3 dots and share the link so that other people have the opportunity to say, I don't want to do this, I don't want to look at this, I don't want to get this free information and this free content. Click on the link up on there to be able to share that with others so that they're able to check it out. Please give me your comments, your thoughts on what you think of it, what you think would be a benefit, how topics that we could discuss, and also just overall, if you think it's a good idea. Don't be afraid to criticize it. My critics are always out there. They always have something to say. Thank you so much.